You could be leaving several $1,000s on the table every year if you miss these tax deductions. Every year, countless Canadians miss out on significant tax savings because they're unaware of common deductions and credits. By the end of this video, you'll know exactly which ones to look for, how to qualify, and simple strategies to boost your tax refund. Here's what most people get wrong: they don't know what they don't know. First up, the Registered Retirement Savings Plan. Contributing to an RRSP is one of the most powerful ways to reduce your taxable income, dollar for dollar. For 2025, you could contribute up to $32,490, depending on your earned income. Don't just contribute, strategically plan it to maximize your tax savings now and build your retirement nest egg. Families, pay close attention to child care expenses. If you've paid for daycare, camps, or sitters so you or your spouse could work, go to school, or conduct research, these are deductible. Ensure your provider is arm's length, meaning not a family member. Generally, the lower-income spouse claims this to maximize the tax benefit. Medical expenses are often missed, especially smaller ones that add up. These include prescriptions, dental work, vision care, and even certain travel for medical services. You can claim for any 12-month period ending in the tax year, not just the calendar year. Pool your family's expenses with your spouse to hit the threshold faster and maximize your tax credit. If you work from home, you might be eligible for employment expenses. This deduction isn't automatic. Your employer must require you to work from home, evidenced by a signed T-2200 form. You can deduct a portion of utilities, rent, and office supplies. Be meticulous with records. The CRA reviews these closely to ensure eligibility. Moving for a new job, business, or post-secondary education. If your new residence is at least 40 kilometers closer to your new workplace or school, you can deduct eligible moving expenses. This includes transportation, storage, temporary living, and even costs related to selling your old home. Don't miss this significant deduction when relocating. Charitable donations earn you valuable tax credits. Don't just claim them, optimize. You can combine your donations with your spouse to maximize the credit. If you don't need the full credit this year, carry it forward for up to 5 years. Donating publicly traded securities, in kind, can also eliminate capital gains tax, amplifying your impact. For investors, interest paid on money borrowed to earn investment income, like dividends or interest, is a deductible expense. This doesn't apply to loans used for RRSPs or TFSAs. This deduction can significantly reduce your taxable investment income, but careful record keeping is absolutely crucial to prove the loan's purpose and the income generated. Graduates, don't forget interest paid on government-issued student loans is a non-refundable tax credit. This specifically applies to federal and provincial loans, not private bank loans or lines of credit. If you don't need the full credit this year, it can be carried forward for up to 5 years. Only the student who incurred the interest can claim it. The disability tax credit is a crucial, often missed credit for those with severe and prolonged mental or physical impairments. This isn't just a credit itself. Qualifying for the DTC opens access to other vital programs like the Registered Disability Savings Plan, offering substantial financial support. A medical practitioner must certify eligibility using Form T-2201. If you're a member of a trade union or professional organization, you can deduct the annual dues you pay. These must be required for your employment. Often, these amounts are conveniently listed on your T4 slip in Box 44. It's a straightforward deduction that many overlook simply because the amount may seem small, but every dollar counts. To truly optimize your taxes, always keep meticulous records throughout the year, digitalize receipts. File on time to avoid penalties, even if you owe. When in doubt, don't guess, use reliable tax software or consult a professional. Remember, many provinces offer unique credits, so always check your provincial schedule too. Now you're armed with crucial knowledge to boost your tax refund. Don't wait until April, start reviewing your eligibility and tracking expenses throughout the year. For complex situations, a tax professional can be invaluable. Empower yourself with this knowledge and remember to subscribe to our channel for more Canadian financial insights. Now you're armed with crucial knowledge to boost your tax refund. Don't wait until April, start reviewing your eligibility and tracking expenses throughout the year. For complex situations, a tax professional can be invaluable. Empower yourself with this knowledge and remember to subscribe to our channel for more Canadian financial insights.